Good evening, everyone. So now I'm starting up with the presentation, like the topics I will cover today. The first topic that I will cover today is Fibonacci retracement level, and after that rounded bottom, rounded top, and triangles pattern, and last. So I'm presenting it. Is my screen visible?
Yes, sir.
Yes, sir.
Okay. So my slides are visible now.
Yes, sir.
Okay, so firstly, we will talk about the Fibonacci retracement level and extension also after that. And what are the Fibonacci retracement levels are actually like in general, the Fibonacci retracement levels are some horizontal lines that indicates where a possible retracement of a price may occur. Let me show you some figure. This is what the retracement levels are. In that, the Fibonacci retracement levels give you some areas of support and resistance, and to the traders to and investors, the Fibonacci retracement levels are associated with the single percentage points. Is that you can see here
Can you
61.8%,
expand the
50.
screen?
Yes.
Can you expand the screen? Hello.
Yeah, yes. Like my screen is not
Can you
visible.
expand the screen? Yeah, it is visible. Please make it. It will be better.
Okay, okay. I will expand it. Now it's
Yeah.
Rishabh sir, they're asking you to
yes.
zoom it in a bit.
Is it expanded?
Yes, sir.
Okay, okay. So the percentage points that I am talking about is 23.6%, 38.2%. You can see here 50%, and 61.8%, and 78.6%. These are the single percentage point that requirement for the Fibonacci retracement. And this Fibonacci indicator that is provided for most of the trading platform can be handy. Like it indicates potential retracement level for the stock pairs and commodity price. The Fibonacci indicator can be drawn in a different way, such as it can be illustrated by connecting two significant price point. Like if you see this first price point to the second price point, that's connected between the two price point. And for example, it can be drawn by dragging from a price high on a chart to a current price low. Like I will show you first, like by drawing it in this. This is the ITC limited chart, and I will show you like how to draw the retracement level. Okay. So from this low, like from real body, and you have to first draw from the real body, and this is the green, like from the low, press like, extend it to the low, and extend it to the higher point of the real body, like not on the lower shadows or lower like upper shadows, only the body. This is how you can draw the retracement level for the Fibonacci retracement. And After that, in the like after that, like it can be drawn from the from dragging the recent price high on a chart to a current price low, recent price high and to the current price low, and after that we can use as the trading strategy. And how to use it, like Fibonacci retracement are mostly used in alignment with different trends continuation trend trading strategy. In its essence, the trader use Fibonacci retracement strategy by identifying a golden Fibonacci numbers or a strong like Fibonacci level, that the numbers that we have talked about. And for example, this is the this is the HR chart for drawn below. Like we can see initial bear trend. And this is the initial bear trend that we can see, after which the market retraced towards the 61.8%. From there, you can see it retraced to the 61.8%, which is a golden Fibonacci level, where the price reversed and created a new low. After that, it reversal from the retracement level increases. Like what after that 68.58 61.58% the reversal has increases if more technical confluation align with the certain retracement level, like the 61.8% retracement level is backed up with the robust resistance key level in the scenario as illustrated. For this reason, the reversal occur frequently and smoothly. Additionally, other confluences such as trend line, moving average, exponential moving average, volume price, oscillators, candlesticks patterns can be also like helpful if you take that information too with this strong more reversal like retracement level, which will support your Fibonacci retracement. And what do the Fibonacci retracement levels tells you, like what it actually indicate, like it indicates a wide variety of the variety of trading strategy. Many traders and investors use Fibonacci retracement level for finding potential entry orders, for even stop loss levels, or most of the traders believe that the support and the resistance level backed up with the Fibonacci retracement level has a higher probability of working. One of the leading strategies with the Fibonacci retracement level is the trend continuation. For example, if a trader notices a big impulse to the downside, the trader decide to drag his Fibonacci tool from high point of impulse to a point of the impulse, like of the golden ratio that we talk about 61.8%, and he decide to sell the stock commodity there. As the price previously went down significantly, there was a high probability that the price would further move to the downside. In this scenario, Fibonacci retracement helped the traders decide where his entry order should be for the possible trend continuation. And we talk about the what are the limitations of the Fibonacci retracement level. As trading is highly uncertain, the technical analysis and technical indicators can be entirely useless when fundamentals of the market or market sentiments comes into play. For example, if Fibonacci retracement level 61.8% that indicates the price might reverse from them, it does not actually mean that the price may reverse from them all the time. For this reason, in order to define the limitations, the traders must use other confluence such as support, resistance, and moving average. And also, the traders can navigate the fundamentals and understand if certain stock or commodity fundamentals and news are in the alignment with the trades setups or not. Another limitation in the Fibonacci retracement level strategies creates a dilemma in many traders. For example, as the retracement level are close to each other, many traders falls into extensive dilemma when they think a certain retracement level would work and another would not. For this reason, it's crucial to understand and discover that which retracement level works for you, or to stick to that level by eliminating other retracement level. This is the pharma Nifty Pharma chart, and this is the example for the Fibonacci retracement level. And you can see most of the time, like it from one high price, it downs to the 23.6. After that, it continues to the Fibonacci next percentage point of 38.2%. And at 50%, it created two lows, and after that it has crossed to the 50% also. When you have crossed the 50% point, then you know that it can the next point is around 61.8%, and it will touch it. So if whatever the target or whatever the stop loss you may like, you can whatever the loss you can bear, like if you can bear the loss of around 23.6, or after that you can bear the loss. So when it creates a new low and crosses the 23.6 percentage, it indicates that at 38.2% it will go at it might cross even 38.2%, or it might go off 50%. So you, according to this percentage point, you can set up your stop loss, or the like at what point I will sell out this stock. So this is what the idea will give you. Now we are talking about what are the Fibonacci extensions. In general, Fibonacci extensions are the level used by the trader to identify potential profit targets and estimate the continuation of a price move after a pullback or reversal. Fibonacci extension level are highly useful in understanding reversal and possible obstruction in price continuation. Put simply, Fibonacci extension levels are the key areas where the price of a particular stock's forex pair or a commodity might reverse from. Extension can be laid out by simply using Fibonacci retracement tool, and indicators automatically drawn out from the uh, extension level, which price can be reversed from, like from where. And what exactly this Fibonacci extensions tells you, like what are the indicators are there, what does it indicates. Fibonacci extensions can be highly utilized in different trading strategy and trading style. These extensions can be validate critical support and resistance levels areas, find the potential reversal point and trend reversal areas also. For this reason, traders utilize this tool to project their overall bias of a bear and bull trend. Sometimes it can be highly adverse in consolidating market to find a key support resistance area. In such a scenario, Fibonacci extension can be help traders find those key support resistance area. A mix of Fibonacci extension tools and a consistent support resistance strategy can help traders to evaluate during their trading consistency. As good as it sounds, it's crucial to notice that the price can break Fibonacci extension levels and do not act upon it. Also, it's imperative to know that the Fibonacci extension levels can can give you some possible areas of interest. These levels do not signify that the price must reverse from the extension, but it can also represent a levels important. For this reason, it's important not to trade solely based on Fibonacci extension. A mix of another trading strategy and the use of Fibonacci extension can confluence to an already working trading strategy. And we can not just Fibonacci extension we can talk about, we can also use with the fundamentals and RSI value or other indicators to like be sure of the trade strategy that the price might go high. So suppose a trader taking advantage of a bull trend in stock and has a long position set on the stock. In that case, trader can easily lay out Fibonacci extension and look for possible retrates profit, taking profit levels. Yeah, here as the
Excuse me, sir.
profit levels of 50%, 61.8%, and 100%. These are and 123% of the Fibonacci extension levels.
Hello.
Yes.
Sir, could you explain those percentage over there? What does this mean?
It means that what if you are talking about the Fibonacci extension level, like this percentage gives you an idea of what profit levels that it may cross, what profit level it may cross for the further. Like if I show you in the screen, like I was showing. Can see here the after 50 percentage, like this after creating the low, like this is some kind of a flat type pattern. After creating the 50 at 50 percentage, it shows the reversal pattern, and it has crossed to 100 pattern 100% also. So not just with this percentage point might give you an idea like at what price that like this stocks can go up to. So not just with this you can trade, you have to also take up the another things also, like RSI level, moving average, EMI level, average also. Like not just, but this will give you some approximate idea that at what point this it what more what profit levels that it may cross up to. I will talk
So
about
it means that
uh,
50% of the, like if a stock is of 10 rupees and if it's 50%, that means it has crossed the 15 rupees. You mean that?
No, no, I didn't. I don't really mean that. I just mean give you that like when if you see that stock is at like it has good RSI movement. Like if RSI movement shows a momentum, good momentum, and from lows and it has a prior downtrend. Okay, for extension. So from extension downtrend, if you from a low, if you extend the Fibonacci extension level, then that extension level will show you an approximate profit level that it may cross. It may cross. Okay, that doesn't guarantee. You have to see the fundamentals. You have to see RSI. If RSI movement doesn't show you a momentum, then it may not cross that profit levels. So it doesn't even guarantees that it will cross that movement also. You have to take an account for the another factors also. What are the factors that you have talked about MACD and yeah, exponential moving average. So not just with the like Fibonacci extension point of view, it's just a one indicator, one type of indicator that it may show, like what are the levels that it may cross. So we cannot depend on just one thing. Okay, this I am just teaching this topic just to show you that this is also a one perspective of thinking. What are the profit level that we can set up. Okay, in news you can
50% means
see.
that 50% profit, right?
Yes,
Okay, got it.
it doesn't guarantee. Sometimes you have to see lot more, just not
Yeah, yeah.
one indicator.
I understand.
So we are at this graph. So sometimes as good as it sounds, like it's crucial to notice that the price can break from Fibonacci extension levels and do not act upon it. Also, it's imperative to know that the Fibonacci extension level can give you some possible areas of interest. This level does not signify that the price must reverse from the extension, but it also represents the levels of importance. For this reason, it's important not to trade solely based upon Fibonacci extensions. Mix of other trading strategy can be also used for the Fibonacci extension. And the advantage of bull trend in stock and as long position set on the stock, in that case the trader can easily lay out Fibonacci extension and look for possible lead trade target profit. What are the target profit that we can count on for this level? And Fibonacci can help the trader identify different reversal points. Fibonacci extension can be utilized on any time frame and any financial market chart. There are no limits to it, as Fibonacci extension can be used on all time frames. Convergence of different extensions on different time frames on the same key level can make Fibonacci extension a very crucial and important areas. About the limitations, it's same as the retracement level that and the uh, doubt that asked upon now, that we just can't rely upon this, and we have to consider other factors also. So this what the limitations tells you about. And now I will move up to the next topic of identifying rounded bottom pattern. This was the example of Fibonacci extension. Another, how to identify a rounded bottom pattern. Like first, you have to see for the rounded bottom pattern. The first thing you will see is downtrend. This is a downtrend, and after that, a rounded bottom is created here at rounded bottom, and there is a neckline. And when you take talks about the neckline, I will give you an example for the ITC Limited. How to create like I have seen rounded bottom pattern in the ITC Limited. As you can see here, the stocks was in the downtrend, and this was the neckline that is created. This was a downtrend, this is a neckline, and this was the rounded bottom. Okay, so this rounded bottom, after that it has reversed and go to the new high, you can see at this point. So this also like from this year also you can extend, like take the help of the retracement level also, and with this bottom rounded bottom pattern, you can see the chances of getting the price are like at touching at new high is higher here with this pattern. And more the like size of the cup is than the like more the number like size of the cup, the reversal pattern or more base will be created, and more reversal chances of reversal may also occur. More chances of reversal will occur if the size of the cup is more, like from here to here or something. This patterns also requires a substance price move, this time to downside before consolidating for an extension period, forming the rounded bottom. The price then begins to rally back above the neckline of the consolidating areas. Like after the rally will begin after that consolidation of the rounded bottom, and at this point the pattern has been completed. Now, what are the strategies? Like how do we trade for the rounded bottom? How do we trade for the rounded bottom? Like first, to enter the trade patterns look for the neckline that is marked on the chart below. Like once the price breaks before and the candle closes above the neckline, in this you can see this is a neckline, and the price closes above the neckline. If the price closes above the neckline, you can either enter the market with a buy order, and the chart shows that the neckline being broken by the price. This is where the long traders can enter the market. The first is a downtrend, the second is rounded bottom, the third is a neckline, and after that close of a candle that breaks the neckline. And after that we talk about the long entry. The stop loss is being placed above the neckline of the pattern, and if the price trades below this point, the probability of pattern working out have decreased. Like if there is any like bearish candle, or it may doesn't cross even neckline, so the probability for crossing the neckline would be would be decreased, and you can't just get the profit levels on that. And profit target are being measured by the taking the height of the actual pattern and then extension distance upon by the neckline. The chart shows the stop loss and the profit level, the downtrend, and that after that neckline height of the pattern. You can see what is the height. I have talked about more the height of that third number, more the height of a like distance of the cup, the more that it will it shows a reversal pattern. Chances of reversal pattern will increase if the height of the pattern is more. And long entry and stop loss after there is an example of, yes, there is. This is an example of rounded cup pattern of escort monthly chart. You can see the base has been created. The cup size was so long. Then, if the cup is more, cup distance is more, then the reversal chances of reversal would be increased. And here you can see, I'm just not talking about the cup, the RSI movement also. Here the RSI movement has crossed 50% levels and shows momentum. So if the RSI is showing some of the momentum, then there is this is a second indication that price may reverse from it, may reverse. And this is second example for the rounded cup pattern about the GSW steel. You can see the here also at that when the price break the cup, like sorry, the price crosses the neckline, you can see the RSI movement also here also. This is the RSI momentum was crossed up 50%, 50 point, where we can see the RSI oscillate between some 20 to like 0 to 100, but we set at 20 to 80. Like if we set up 20 to 80, then you can see at 50 levels of RSI, it has shows a momentum. So with the momentum, if you consider the cup pattern, then the reversal chances of reversal getting more high. And the next is rounded, how to identifying a rounded top pattern. The first we will see is uptrend. The first thing that in the chart we will see an uptrend, and the next we will see a neckline. Okay, the price close the second would be a rounded top will be shown in the figure. And after that, in order to pattern to occur, the price must first rally upwards and consolidate for an extended period, forming the rounded top. It then eventually falls back down below the neckline of the consolidating area. And when we talk about how to trade with this rounded top, how to trade with this, to trade this
What do you
pattern,
mean by
look.
consolidation here?
Yes.
What do you mean by consolidation here?
Consolidation is like stable, like price is getting stable. Okay, there are three types of things. Like when we are talking about consolidation, it just means the price is getting stable, not bearish, not bullish. And when we talk about accumulation, it getting uh, we are talking about the stock price is getting bullish. And when we talking about distribution, the stock price is getting bearish. There are three types of things that I will talk about. So remember these three things: distribution, accumulation, consolidating. Okay.
Yeah, okay.
How to trade with the rounded top pattern? To trade this pattern, look for the neckline that is marked on the chart. That is already marked. I have to show the chart also. In this, you can see the neckline at 206.05. This is a neckline I have taken. Okay, so at every chart you will see this is this indication would be there at if you are at trading view, the red line you will see it at this point. This will be your neckline. And to trade this, first you have to look at the neckline, and once the price breaks through the candle and candle closes below the neckline, you can see here the red bearish candle, and this has crossed below the neckline. Then you can enter the market with a sell order. The like if we talk about what are the things that uh, we can see in this rounded top pattern, the first thing will be seen is this should be an uptrend. The first thing should be it should be an uptrend, and rounded top should be formed, and neckline you can and after that, close of a candle that breaks the neckline. The neckline after the neckline should be broken by the bearish candle, and at this point, at the fourth point, this is mentioned in the figure, you can go for a sell order. The stop loss is being placed above the neckline of the pattern. If the price trades beyond this point, the probability of pattern working out have decreased, and you do not be in the market any longer. So if like in the neckline, if the it comes with it if the break line, like bullish candle doesn't break, like if the candlestick doesn't break the neckline, then the probability of the price getting lower would be decreased. So profit target are being measured by the height of the actual pattern, and extending that the distance down from the neckline. More the height, more the chances of price getting lower. So, and also you can see up the RSI movement, which will like in this case the RSI movement will be lesser than 50,000, and the momentum will be going lower.
Hello, sir.
Yes.
Just wanted to know, like, how do you get to know that this is the start of the rounded cup pattern? Because there are many start points, right? How do you get to know about when you to start here?
Like, how, like first you have to see is the uptrend. Okay, yeah, first is the uptrend, and after
But
that
uptrend is from like is from bottom also, right?
yeah,
There is a
no,
bullish candle.
for bottom you have to see the downtrend. For the bottom you have to see the downtrend, and for the rounded top you have to
No,
see a uptrend.
I'm saying that in the uptrend only, there are many
Yes,
candles which are in showing uptrend. On which candle should we like start a trade?
you have to see what the how much the long is the rounded top is, and if that rounded top is more, like distance of rounded top is more, then the chances of the price getting lower would be increased. If the RSI doesn't if RSI showing the less momentum, very less, below 50 levels. So at when the neckline, if the bearish candle crosses that neckline with a big with a bear red candle, then you can have a sell order. So, and also with the retracement level and extension with the Fibonacci percentage point, you can get the what are the stop loss or what are the profit levels you can book for this stock. So these are the things you have to These are the indicators, and more indicators you have to think about, not just with the rounded top pattern, but also you have to think upon the Fibonacci extension level, at what price, at what percentage point that it may go, and RSI movement also you have to see, and MACD, moving average convergent divergence, and exponential moving average also see. So these are the indicators that you have to see, and if there is any financial losses or any kind of a uh, like negative news is there, so you have to consider that also. So these are the things that I see. Now I will now we will talk about the triangle patterns. Triangle patterns. A triangle patterns when a stock trading range narrow downs following an uptrend or a downtrend, usually indicating a consolidation, accumulation, or a distribution before a continuation or reversal. That the three things I have talked about: consolidation, accumulation, or distribution. So in this triangle pattern, you will see these three things, and the triangle patterns comes in three varieties: ascending, descending, and symmetrical. Although all three types of triangles are interpreted similarly. So the first triangle that we are talking about, first two triangles are just ascending and descending triangle. In ascending, descending triangles are right angle triangles in that line, extending along the two or more lows. Two or more lows you can see as of an ascending triangles, and ascending triangles have a rising lower trade line. This the lower has been increased, rising lower trade lines is there, and as a result of accumulation, so are always considered to be a bullish signal. If this kind of lows are showing in the stock, then the stock price movement will be increasing, and the support should be rising in this case. They form after an uptrend or a downtrend. If you are talking about the descending, the resistance lowering you will see as consider are always considered to be bullish signal regardless. Descending triangles have falling upper trade lines as a result of distribution and are always considered bearish signal. And the like the if the price highs are getting lowered, if like resistance are getting lowered, and then this is the indication of the descending line, and the lowers of the triangles should be at the same level, and this will show descending triangles will show you the price will getting lower and lower. And when we talk about symmetrical, okay, this is an example of a ascending triangle. As you can see, the support are rising, support levels are rising, the new lows are getting rise in this triangle, and the resistance is stable. So this is an example for the ascending triangle. And when we talk about descending triangles, the resistance levels are getting decreases, and the high of the pattern, like high are getting lower in this. The you can see the first point here, the next point is lower than the first point highs, and after that third point high is lower than the second point highs. This shows a descending triangle where you can see bear are more stronger here, and this price of getting lower will increase in this. And the next is symmetrical triangles. Symmetrical triangles have descending highs and ascending lows, such as both the upper and lower treadmills are angled towards the triangle apex. In the graph you can see the resistance levels are also decreases, and the support levels are also increases. Like it's a combination of ascending and descending, it's looking like that. So nothing of this there is a stable, so lowers will be getting like higher after, and uh, higher higher price of the stock are getting lower here. So symmetrical triangles are the sign of a consolidation and usually result in continuation of a prior trend, although they can also indicate reversal. And what are the triangle pattern time scales are like that? Okay, this is an example for the symmetrical triangle. You can see here the new lows are getting rising from here one point, and the next second point is higher than the first point, and the third point is higher than the second point. And when we're talking about the highs, the highs are getting lows from if you see the first point, the second point is lower than the first point, and the third point is lower than the second point. And this is a perfect example for the symmetrical triangles for the stock. This triangle patterns are mostly commonly applied on the daily charts, interpreted over a period of several months. And for example, strong triangle pattern on daily charts require a prior trend that is at least a few months old, or typically develop for several months before a breakout. However, triangle patterns can also be observed used for trading on shorter time scales, although doing so leaves the drawing of a triangle patterns up to a greater degree of interpretation. The next is triangle pattern simplifying. How to simplifying the patterns time scale, as triangle pattern work because they are represent underlining pattern of consolidation. Like they are represent the underlining pattern for the consolidation and accumulation or distribution. In the symmetrical triangles, both bullish and bearish traders are evening out or testing the price of a stock, following a significant price trend until eventually either bulls or bear will wins. So in symmetrical triangle, the possibility, like any possibility can occur, like even a bull can win, even a bear can win in this situation. So with the result usually following leads of a previous trend. So previous trend, if you follow the previous trend in which is getting, like if the bulls are winning more, or there is some kind of a similarity with the previous trend also on the old chart, and with the result usually followed by the prior trend. In the ascending triangle, in the ascending triangles, buyers are continue to get more aggressive over time, resulting rising lower trade mills as subsequent low increase until they eventually win over bearish traders. And the stock price breakouts, and the opposite action may occur in the descending triangles also, where sellers are becoming more aggressive and driving towards a consecutive higher lower until the stock breaks out bearishly. So how to trade with this triangular patterns? A symmetrical triangle requires at least 4 points, two highs, and where the second high is lower than the first, and the two lows where the second low is higher than the first. In ascending, the triangles are the same across the triangle rather than the descending, while in descending triangles, the lows are the same across the triangle rather than the ascending. For a triangle to exist, there must be well-established prior trend. For example, one that is at least a few months old when a looking a daily chart for all three types of triangle patterns, drawing a line from first high to the next low. I will take the example of the ITC only. So in this ITC limited example, I will show you the example. Uh, I'm drawing the first triangle, and from here the new lows are getting high are getting lowers from one point to another point. So first high points are getting lower to the next high point, and the third point are getting lower. The third high point is lower than the second high point, and the fourth high point are getting lower to the uh, third high point. So, and the you can see here the support is like the lows are stable here. So this is a, perfect example for the descending triangle pattern in the ITC limited. You can check on it by your own also. So in this chart pattern, I can say there is a high probability or high chance for the price getting more lows in this ITC limited. For all three types of triangle patterns, drawing a line from first high to a second and continuing it while drawing a line from the first low to the second and continuing should be form a triangle. As two lines intersect, the triangle pattern identification is more supported as more high and low points are added to the lines as the stock proceed further into the triangle patterns over time. Volume should also diminish. The triangle patterns typically last for anywhere from 1 month to 3 months or more on the daily chart before a breakout occurs. When the stock price moves outside the line of a triangle, the best price action occurs when the breakout forms about halfway to the three quarters of the way to the apex of a triangle. The you can just relate this idea with my ITC limited example, where the triangle length is being measured from the apex to the base of a lower trade, like of a higher trade line, like the trade line of price of higher price is getting decreased, and break before or after that point may significant the stock has not fully consolidated or breakout becomes after that the breakout of price getting lower could be increased in that ITC example. Although the direction of initial break should indicate where the previous trend will continue or reverse in a symmetrical triangle. So in symmetrical triangle, so direction for which it may get, so you have in the case of symmetrical triangle, you have to see the prior trend also. What are the prior trends of the older months? This is the example that this is the same example that we have seen for the ITC limited, where the resistance is getting lower and the support are being stable, as we have seen for the ITC limited for. So this is how you can trade for the triangular pattern. So thank you for like today's, this is was my last topic. If someone's having doubt, can ask me about what I have teach today.